The dollar index just hit the 98th percentile, and dollar strength at this level puts pressure on emerging markets and commodities. Something is breaking beneath the surface, and the data confirms it. Right now, the dollar index is at 101.4, the 98th percentile for the past year. Historically, dollar strength at this level puts pressure on emerging markets and commodities. Snider says the eurodollar system is tightening, and nobody sees it. The data says gold rose 1.2% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Snider just moved from wrong to right. Snider called it dollar liquidity crisis. The dollar index at 101.4 confirms it. Too early to call McElroy right or wrong. The thesis is building but not confirmed. 188-day streak, Hartman might be right, but the data has not confirmed the thesis yet. 182-day streak, the commodity analyst call is not working, for now. Oil falling to $69.2, down 3.7%, opposite of the bullish call. 5 days running, Gammon's call is not working, for now. Credit stress thesis, but investment grade tightening to 76 basis points, opposite direction. The dollar analyst call is not working, for now. Gold moving against the bearish thesis, up 1.2%. The volatility expert just moved from right to wrong. The volatility expert is wrong, for now. VIX at 18.9 is moving against the thesis. Score today, 1 right, 2 early, 4 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question, is the dollar about to surge, or is it topping out? Snider says, the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast, and it is a clean narrative. But here is the problem. Gold rose 1.2% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here's what makes this interesting. The dollar index is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. The dollar index at 101.498th percentile. Gold at $4,079, 37th percentile, up 1.2% today. Bitcoin at about $60,000, first percentile, up 0.5% today. Bottom line, right now Snider has the better case. The dollar index at the 98th percentile backs the thesis even as other signals push back. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 101.4. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 101.4 is in the 98th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,079. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here's how close we are to the edge. We are 74 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade, spread crossing 150 basis points, currently at 76 basis points. At this week's pace, that is roughly 37 weeks of runway, that is mid-March. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has equity risk premium, Buffett indicator flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data disagrees with that thesis right now. Phase 1 holds with 74 basis points of buffer. Conditions favor risk but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the ZIP level data is screaming about today. CLE, KY, lenders are saying no at scale. In CLE, KY, the HMDA denial rate is 75.4% across 289 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. Breathitt, KY, lenders are saying no at scale. In Breathitt, KY, the HMDA denial rate is 74.8% across 167 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. LA, days on market is spiking in HUMA. Days on market in Huma moved plus 100% in 30 days, now 248 days. Buyer leverage score, 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge, or is it topping out? Let me show you what happened the last time we were here. The dollar index at 101.4 is in the 98th percentile. That means it is higher than 98 out of 100 days in the past year. In 2022, dollar index hit 114, crushing emerging market currencies and commodities. In 2020, dollar spiked during the March liquidity crisis, then reversed on Fed intervention. In 2015, dollar strength crushed commodity exporters and triggered EM currency crises. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, Bitcoin at about $60,000 is in the first percentile. The last time both the dollar index and Bitcoin were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here's what the data says to do right now. Stay alert on oil. It is dropping 3.7% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Phase 1 holds. No alarms. But the runway at 74 basis points is shorter than last month. Only one speaker is right this week. Low conviction environment. Size position smaller. Every signal is live at analyze.builderslens.com. The talking heads give you opinions. We give you the numbers. Subscribe, and I will see you tomorrow morning with a fresh scoreboard.